Hey, what's up guys? Note Investor here. I'm going to be doing this recording here because we did a live stream, a welcome kickoff live stream yesterday. I had some bandwidth issues, it turned out, so the voice and sound came across choppy. And so I'm going to do a condensed version of that and just post a video here for you guys. For those that are new and for those just to talk about strategy, what to expect here in the near term as we kick off our next month's cycle. So this month, the channel is called Oasis. For those of you that are new, I do change the channel name every month. The last several months have been celestial names, moon names, that side of thing. I'm going to switch it up a little bit. Yes, in regards to Ready Player One, if you haven't seen it. Pretty good movie, go check it out. So Oasis this month, really quick on the Slack tips for those of you that are new. You will see multiple channels, and these are all on the open channels, public channels, as well as the portfolio. But the private channels are the Oasis and the Oasis questions. So the first one here, Oasis, is for me to post in only. That's where I'm going to post my updates. But you can reply as a thread. But if you want to post any new questions or new comments related to those posts, then put those in the Oasis questions. If you have comments on anything else in general, a chart you want to look at, questions about strategies or trading or news events or anything like that, please post those out in some of these other channels here, because there's a lot more people that are in these channels than are in the private channels, and so you'll, one, get a lot more response, and two, it'll help keep it a little bit organized so that these two are just related to, you know, current trades and updates and that sort of thing. The other one is the alerts channel. There is a separate website, nodeinsiders.com, which is a proprietary alert system, but as part of the private group, you get access to those alerts, which are sent over to Slack, and those are on the alerts channel. And then there's a new channel, portfolio, that's an open channel. So if you don't have access to all of these, send me a direct message and I will add you to those. Quick tip on the Slack: if you are new, you're going to default to have notifications on all the channels. I would recommend turning off notifications with the exception of those you want to get updates on. So ideally the Oasis channels, and you may even want to see the alerts channels or anything like that come through. So that's how you can do that. You just click on the channel name and you can turn it off there. Some general thoughts in terms of my strategy, my approach. My first goal, my first priority is going to be to manage risk and protect trading capital. So simple as that. If the market feels risky, I'll get out of the way. I'll put stops in. You'll notice I always keep stops. Sometimes you get whipped out, sometimes you get stopped out, and then the thing keeps going higher, and that's just part of trading. But you have to maintain some sort of risk, and so that's my priority, is maintaining that. Generally, my goal is to increase BTC value, and that is the goal this month, with the alts kind of washed out and oversold, but that ultimately will depend on what Bitcoin's doing. So if Bitcoin is weak or shaky, then I'll be doing more trades from the USD Tether pairs versus the alt BTC pairs. However, you know, if Bitcoin's in a decline, then I'll just protect that going in and out of cash. Keep in mind, this is trading, this is not hodling, this is not investing. Totally different strategies, totally different approaches. With trading, the goal is to get in and out quickly. You want to capture as big of a move as possible in as short of a time as possible. And so there'll be times where, you know, the general crypto market is going strong, and you're going to say, oh, I wish I would have got that entire move. The whole market cap went up 30-40%. On the flip side, you're going to also ride that down when it corrects. And so if you want to be exposed to the total crypto market, then you hodl and you buy a spread of coins and you just ride it out. Otherwise, trading, you're a little bit more nimble. You get in, you get out. If the market goes down, you go quickly into cash. And so totally different goals and strategies there. So just keep that in mind. When I make posts, when I make updates, I am not referring to any type of long-term strategy. This is simply on my trading accounts. And so with that, some weeks, some days will be much more active than others. There'll be more trades on certain days. When things move, they tend to move in tandem. And if things are falling and looking like they're just pulling back, then sometimes the best strategy is to just wait and sit it out. And so you may go a couple of days without doing anything, right? And that's just the nature of it. But sometimes that turns out to be the best strategy because you avoid a lot of the pain. During markets that are very choppy and shaky, sometimes the best strategy there is also just to wait it out. As far as position size goes, there is a calendar that I posted in the resources channel. I will post it again. It's also on the education channel. It's a simple trades tracker, but it also includes a position size calculator. And generally the position size is ultimately going to depend on the size of the stop loss for that particular trade. And so it just turns out that they generally are about 10 to 15% of my total account. But again, it will depend on the stop loss. And so if I have a trade that requires a wider stop loss because of the market structure or the name's just a little bit more volatile than others, let's say for example the stop loss is 9%, well then I'm going to make it a smaller position so that at the end of the day, if I get stopped out, the total risk to my trading account for that one trade is still relatively small. And generally my rule of thumb is I will risk no more than 1 to 1.5% of my total trading account on any one trade. The exception would be like Bitcoin. I will tend to go a little bit heavier if I'm making a purely Bitcoin trade or even Ethereum. But with most other names, especially a smaller, more volatile altcoin, I'll just keep it relatively small because you got to keep wider stops on those. And then I'll generally max out at around 4 to 5 trades at any one time. That's for two reasons. One is it's hard to keep track of more than that many trades. If you got to watch them closely, you got to manage the trade, manage the stops, take profits, etc. It tends to be a little harder once you get past that 4 to 5 mark. And also, there's just a high degree of correlation in this market. And so you have to always keep an eye on what is the total risk exposure to the entire account at any one time. And the way you do that is you take the sum of all of your trades and the stop losses, and you assume if I got stopped out of everything here, which is not out of the realm of possibility, you get some news reaction or Bitcoin sells off, then everything takes a hit. Then in that case, you don't want to have too many trades, too much exposure, because then you'll likely get stopped out of all of those and your total account will take a larger hit than you would have liked. And so keep that in mind. If I do max out and I'm at my 4 or 5 limit or whatever, I'll continue to post updates, continue to post charts that I like, setups that I'm seeing, because sometimes I'll close out one trade that maybe is just lagging or not working and jump on another one. And if not, I'll post them out there for you guys to keep an eye on certain names that are setting up well. So as far as the weekly cadence, the daily cadence, my updates here, I will generally be busy online most of the day. I usually start around 7:30 or so a.m., sometimes earlier, but it's usually around that time. And then I'll go through my afternoon, 5 p.m., 5:30 or so, take a little bit of a break, evenings, and I'll catch up later in the night. But I'm generally online most of the day, as well as on the weekends. But I do slow down a little bit on the weekends, just to take a little bit of break in there. But I am still trading and posting from time to time on the weekends, and even live streams. We'll get at least one live stream a week, if not more. It just depends on the market updates, and they'll be varying. Some of them will be purely market updates, other ones will be educational in nature, where I go over strategies, stop loss ideas, different things like that. And when I make my posts, I'll preface them, or I'll try to do my best to preface them with these words: trades or updates, charts, watch lists, etc. And as far as my buy signals and all that, I'll post a trade, and then I'll put the name of the ticker, the BTC price, the stop loss price. If there is a target, I'll list that, some additional thoughts. I'll put a link to the chart. If it's a USD pair, then I'll be good to notate that. And so if this was a USD trade, I'll do something like USDT, and then I'll put the USD price there. And then vice versa, I'll say trade, sell, and I'll take profits or get stopped out at that point. Sometimes I'll post an update, moving my stop, taking partial gains. A lot of times I'll post conditional orders. And so if something is setting up and I can't watch it, I'll put a conditional buy order if it breaks out. The risk with this is always it breaks out when I can't watch it, and then it just whipsaws and turns right around, and I don't have a stop in place. So that's always the risk with going with those. But another thing to note is this month with BTC just so shaky in the market environment, testing support, and it could go either way. We could bounce from here, have a nice move higher, or we could break down and really break support, and then I'll be looking to add some short entries there. So mostly I'll be looking at shorting BTC, maybe some Ethereum. I'm going to be using Kraken for that. You can use other exchanges, Bitfinex, BitMEX. There's a handful that will let you take shorting trades. Shorting's a little bit different. You got to do it quicker, a little bit faster in terms of taking profits. It is riskier, but and so certainly not for everybody. If you don't want to short, you don't even need to short on margin. You can just short a 1-to-1, but it is a little bit different strategy. And so I'll work on putting together a little bit of a overview slides and whatnot to go over some short approaches if that's what we have to do, if the market dictates that. So setups and entries, the setups that I'm looking for, the type of trading, one is momentum trading strategies. That's trend trading, going with the trend. Always the best way to do it because the trend is your friend. You got the wind to your back. You tend to be a little bit more profitable there. You can hold a little longer. And so those are the best trades to go with. But if the market is just in pullback mode, it's hard to find these until after things start to bounce. And so that's what I'm going to be looking for. Pullback entries on these are the best way to go. The other one is breakout trades. These are good for when things are sitting tight, getting in a range, a little bit of a pennant or an ascending triangle, a cup and handle type of pattern. These are good breakout trades, and you can trade them either right on the breakout with a conditional buy, or you could wait for the breakout and then look for a pullback and trade the secondary entry. And so that's what I'll be looking for. Then there's counter trend trades. Those are going to be what we're looking at right now because of the market. So you got a falling wedge, you got a double bottom reversal, those type of moves off of the lows. These are higher risk, lower probability trades. And so you just have to keep that in mind. And the way to mitigate some of that is you keep your position sizes smaller, and you take your profits quick, or take partial profits, right? So for a good example would be you have a trade and your stop loss going into the trade is 5%. Well, when your trade is in the green 5%, take half or even a third of the position, bank that as profit, and what you end up doing is minimizing the total risk of the trade, because now you've locked in some gains, and if the trade turns against you and you get stopped out, you no longer have a 5% risk exposure because you've already taken some off the table. You have 1% or even a break even, and then you let the rest ride. And so that's one approach. The other approach is if you're in the green, start moving your stop up, tightening it up, go to break even, because the counter trend trades just tend to be a little bit more volatile and will not, you're not looking for a full reversal, strong rally higher. You're just looking for a quick pop into resistance or into some sort of Fibonacci bounce ratio, and then you get out of the way. Minimum risk to reward on all of these trades are going to be 2-to-1 ratios, and I'll go over this a little bit more in some educational live streams for us, but that's kind of the minimum. If I can't, reasonably get a 2-to-1 risk reward, meaning my upside target is twice what my stop loss risk is, then I will just not take the trade or wait for a better entry that will give me that ratio. As far as the actual entries, what I look for is on a pullback, I'm looking for a bullish engulfing reversal, and this is a candlestick pattern, and we'll go over that, or I'm looking for a touch back to one of the moving averages, such as the 10 EMA on the 1 hour or the 4 hour chart. And the 4 hour is generally the pattern or the price time frame that I trade. Also, we're looking for patterns and breakouts, just like I mentioned. And then I will use the 50 EMA as a little bit of a gauge guideline to just tell me, is it above or below? And this kind of gives you some hints as to, are we bullish or bearish in terms of our trend. So let's go take a look at the charts real quick. And so current market right now, BTC, as we know, is been in a very steep pullback for the last week, and we're trying to bounce here a little bit. The key level to be watching is the 6,800 zone. Right now we are in the middle of a little bit of a bounce attempt. It looks positive. The current candle is going to form a potential bullish reversal engulfing candle, and the body of this candle is bigger than the red right now. It depends on how it closes, but I do want to see more volume. Volume here is pretty light, so that's something to keep in mind. The other thing to keep in mind is this is just a bounce at this point. The 10 EMA is still way up here at 7,300, and so we're going to face some resistance if we continue higher. Going into that 73 to 7,400 zone will absolutely be resistance to be keeping an eye on. If it looks like it starts to fail, roll over, going into the zone, then I may look at putting some short entries there and taking a shot at another test of the lows. And so just something to keep in mind there. But the alts have continued to be very oversold versus BTC. If you look at the daily charts of things like Nano versus Bitcoin, you can see they've just been in this big decline. If you look at something like EOS, Bitcoin, and their big decline. And so you get the gist there. We did a trade on WAN here earlier. I took profits on that, but I'm looking for these type of patterns, right? These big reversal patterns from the lows. These are counter trend trades. I'm looking for, you know, the signal that there's big volume and then a little bit of a pop either into a moving average or into the first resistance zone. So in WAN that would be there and then there. You could also use a Fibonacci bounce ratio. So there's a couple of ways to do it, but that's going to be the nature of the market we're in until we start to trend higher. Then you'd be looking at the 4-hour chart for potential entries, you know, breakouts from consolidations or a big move higher and then a pullback. A good example of that was like IOTA here recently, even though it's finally really selling off. But you had a good entry here on the initial pop off the low. So you had a huge volume move higher. Then there was a pullback to the moving average. You could have entered there, or you had a second move higher, another pullback, and enter on those pullbacks. So that's what I'll be looking for. I hope this helps, guys. It's just a quick welcome stream. Wanted to get this out there for you guys just because we had that technical difficulties yesterday with some of the audio coming through. So this is the quick rundown of that. But please don't hesitate to ask questions. Drop some notes out on the Slack if none of this makes sense to you, or if you have some follow-up questions. But we will be doing more live streams for our group to go over this in much more detail. So thanks, guys, and looking forward to another great month.